Stock trading. Opendoor stock jump then crash. Why? Could it continue to go up? After watching this video until the end, you're gonna know the risk to Opendoor stocks. Opendoor stock was up 18.54% over the past 5 days. It was at one point up more than 70% over the past 5 days, but Opendoor stock crashed. I still have Opendoor calls. If you remember, if you watch my previous videos, I sent out the alert. I also posted videos that I bought Opendoor calls. I'm still holding them. This is a $2 strike price call, and I have 3 call contracts. So expiring on January 15, 2027. Stay a long time, right? The stock went down 5.14%. Hey, this one 5.4%, not bad because it has a long expiration date. Hey, I'm still up over 473%, so it's almost 6 times my original investment. Let's go look at 3 strike price $3, and I stayed up a lot, 400% plus, and it went down 7.17%. It went down more than $2 because this is closer to at the money, then $2 is much more in the money, right? So that's why this one moved so much more. And $4, I still have $4, right? $4, and I have 5 contracts. I stay up 276%. That's pretty good. That's pretty good, right? And next one, $5. I still have $5 call. I'm still holding them. I haven't sold it yet. If I sold it right now, I'll need to pay short-term capital gain, but I believe Opendoor stock could be up in 2026 much more because there are a number of conditions that could help the real estate market, which you will know in the middle of the videos. Okay, I'm still at that 137.77%. Look at this. It went down 14.68%, but still has a long expiration date. Long expiration date. And another thing that we can do, right? Even if I own call options Opendoor, I'm not going to sell it yet. Even if I own the stock, there are a number of ways we could trade, which is a day trading momentum stock, right? Once it gets momentum, a stock tends to go up much higher. Okay. November 10, I sent out an alert. That was only $7.97 at the time. Opendoor rebounded. Then in 2 days, it gained 17.57%. So this day trade watch list means that it's something that I do not trade actively because I trade options full time. I use advanced option, which has a much higher probability of winning than this basically trading, day trading movement stock. Okay, in the past 2 days, 70.57% gain, right? I talk about day swing long-term day trading. What does it mean? Speculative stock means it's a stock not really good for long-term investment, right? It doesn't have a profitability yet, consistent profitability. Okay, if it's an investment stock, it will have a consistent profitability over the past 5 years, going up, going up, going up. But Opendoor is not profitable yet, so that's why it's speculative stock. And hey, we can do day trading because Opendoor can move quite a lot. If you just look at it, wow, the past 5 days, 29.6%. After I sent out a lot, hey, we still got 70.57 gain. So it's good for day trading, right? And it's also good for swing trading, right? If it's at the bottom, hey, it's oversold. What we can do is just buy at the bottom. Okay, this is not financial advice. I'm thinking out loud. This is our plan. Okay, my plan and our plan. So buy at the bottom. Then after that, just wait a few days or maybe a few weeks. Then it just bounce back, right? It depends on how much oversold it is. The bounce back could be faster or much higher. So that's one way to trade. Or long-term trading. You know what? If you believe Opendoor stock could be $20 in the next 1 or 2 years, hey, we could literally just buy Opendoor stock right now, right? Even if we buy it at $9 or $10, hey, 100% gain. So that is a long-term trading, right? Not long-term investment, long-term trading. Buying a stock with the intention of selling in a near short term or long term. So this is long-term trading. So why did Opendoor stock went up then crash? Because the interest rate cut in doubt, right? In December, there are some Federal Reserve officials, they don't want to cut interest rate yet, right? They don't want to, because the inflation is persistent and economy is still very good as well. So there is no cutting the rate. There are some people who don't want to cut the rate. There are some people who want to cut the rate, but it's not clear, especially with the government shutdown. Because government shutdown, there is no data available. Because there is no data available, it's very hard for them to make decisions based on that data. So, because of uncertainty around interest rate and government shutdown, it's not the government shutdown that caused the stock market to go down. Okay, it's mainly because interest rate cut. Because the government shutdown, no data available, which makes it very difficult for interest rate cutting decision. So there's uncertainty around will they cut the interest rate or will they not cut the interest rate in December. So that's why stock market pull back, and Opendoor stock also pull back as well. But you know what? Once inflation comes down, and I think President Trump is already making exception on tariff on food, so which is good. Right? Inflation, food is a big part of the labor cost. So inflation could be coming down sooner. Then interest rate can come down sooner. Then, which is good for real estate. And also there's one other reason, very, very important, which could become a reality, and which could be very good news for real estate. Why is that?
The same as renting, in my view, so I don't like the idea.
It's not even a big deal. I mean, you go from 40 to 50 years, and what it means is you pay something less from 30. That some people had a 40, and then now they have a 50. All it means is you pay less per month. You pay it over a longer period of time. It's not like a big factor.
Economists are sounding the alarm on Trump's 50-year, he says, no factor mortgage proposal. Simply put, math isn't mathing.
No, I don't think that's going to really change the metrics for people. What's happened in the mortgage market over the last 4 years is we had this extraordinary period where interest rates were sub 4%, so mortgages are 3.8 to 4.2, which is extraordinary over a 50-year metric. Because we've got to remember, mortgages in America have been 7% forever, and many people bought homes and were successfully ending up owning all the equity in them at 7%. We even went up to 17% for a while. But during this really strange period, rates went down below 4. And people yearn for that. But now, this is just kind of a financial engineering, because the amount of interest you're going to pay over 50 years, you'll never own the home.
Multi-billionaire Jeff.
Right. You see, there is an interest rate coming down. Basically, because of mortgage extension, the monthly payments gonna go down. Okay, monthly payments gonna go down. President Trump is thinking about making 50-year mortgage. So 30 years could become 50 years. Right? We have 30 years. People have options to choose 50 years in the near future. It's not already executed yet. It's they are planning. Of course, there are lots of incentive for President Trump to do that. He is in real estate. His business is in real estate. Plus, he wants people to buy homes, right? Affordability. And if instead of taking 30 years, if you take 50 years, the monthly payment is gonna go down. Of course, your interest payment could become much more because you're paying interest over a longer period of time. Okay, and those people who are not qualified under 30-year mortgage could become qualified under 50-year mortgage because their monthly payment goes down. And plus, some people, they may choose 50 years even if they could afford 30 years. You know why? Because they are thinking, you know what, in case of foreclosure, economic crash, I lose my job. I don't want the banks to foreclose my home. So what would they do? They are thinking, hey, if I choose 30-year mortgage, I need to pay $2,000 in mortgage payment. But if I choose 50 years, I could just pay $1,800, something like that. Then in that situation, I have like $200 buffer in case I lose my job. Like I don't need to worry about it. Doesn't matter, even if I take 50-year mortgage, I will just pay double, right? If you pay principal down double, twice the amount, 50 years could become 25 years. It could be paid off within 25 years, right? So that's only for smart, money educated people, right? Investor, those future millionaires, that's how we think. So, which is good, but ordinary people, normal people, they're not gonna think like that. They don't see that the interest could be double, right? Instead of paying 30-year interest, now they are paying 50 years. They think that monthly payment goes down, but they are paying double of the amount that they would have paid if they have chosen 30-year mortgage. So that's why people will never own their home. they will never own their home. That's what Kevin O'Leary said. Kevin O'Leary used to support President Donald Trump, and also he's supporting Republican in general. But in this case, you know what? He's not biased, and he talked about he doesn't like it. It's just like renting a house, right? You will never own a home because of high interest payment. So how much could you save if you switch to 50 year instead of 30 year? Hey, every month $119. That's what they said. It could be $100 to $200. That's what I believe, depending on the mortgage that you're taking. Okay, so it's not a very big amount of reductions, but your interest you pay will be double. If you take 30 years, right, you just pay what they ask for. Basically, $300,000 house gonna cost you in total $600,000. Okay, if it's double, $300,000 house could become $900,000 house. So you will never own your homes. So that's what he said. So anyway, hey, most people, they are really happy to own a house, even if they pay a lot for it. They may buy, so which drives the demand for the real estate. If the demand goes up, it's good for Opendoor stock, right? Opendoor company, because more transactions gonna be happening, which is very good, and interest is gonna go down over time, which is gonna help that as well. Of course, there are risks to Opendoor stocks. Inflation. If inflation doesn't go down, you know what? Interest rate not gonna go down. So which is not good news for Opendoor companies, okay? And if they could not reduce their debt, they have been able to reduce the debt consistently over the past few months, few years. If they pick up more debt, that could be bad news for the stock. And if they could not get profitability, I would say in the next year, okay, next one year, investor may not be patient. Okay, that's my concern. And other unforeseen circumstances, anything could happen, right? In real estate, in stock market, anything with the war. So these are the risks. And do I think Opendoor stock could go up? Yes, but there are risks present that you want to know, that you can make an informed decision. So if you want to know what I trade, what I buy, you can go to my Patreon. The link will be in the YouTube description comment down below. If you want to reach out to me, the link's gonna be also in the comment down below as well. And you can go to my YouTube playlist to watch, to learn more about stock investing, call option, put options, advanced option, and day trading moment stock. Share, subscribe. I will see you in the next video. Bye.